Hi, I'm Jimmy. In this video, we're looking at General Electric, ticker symbol GE. Our goal with this video is to get an idea of what General Electric's business is and to see if GE could be a good buy today. And hopefully, if they are, well, this could help improve our overall investment portfolio's performance. Okay, so let's start with the most obvious problem that General Electric faces right now. So back in August of 2019, Harry Markopolos, he's the guy the whistleblower on Bernie Madoff. Well, he came out and said that GE was a fraud and that they would go bankrupt thanks to a misleading amount of liabilities that they were reporting. He said that in their long-term care policies as part of GE Healthcare, well, he said that they had been hiding $29 billion in insurance liabilities. Now, the day that this report came out, I was actually a bit critical of it, and I did a video on it. There's a link in the description below if you're curious. But I suppose it's possible that that is the case, although I thought that Markopolos was lacking some real hard evidence to back it up. There was certainly a case made against whether or not they were reporting the liabilities as they should have, but to call them a straight-up fraud, I thought was a leap at the time. And it turned out that Markopolos had actually made a deal with a hedge fund where he was getting paid basically if GE stock fell, so he had some incentive to, push that forward. Now, whether or not GE is in fact a fraud, or whether or not Markopolos did it for good reasons or bad reasons, or whatever it was, is somewhat irrelevant to this. I know that the SEC is looking into GE, and we're going to sort of assume with this video that they're not a fraud. Otherwise, if they are a fraud, obviously don't buy it. If we believe that they are, don't buy it. It's not worth the risk. But if we believe that they are not a fraud, there would have to be an awful lot of people that are committing fraud in this, because their board of directors is loaded with reputable people that I find it unlikely that they would have been doing a long-term fraud, since their long-term care liabilities go way back. That would make this one of the most extreme frauds ever. So assuming that's not the case, let's question whether or not we should invest in GE stock today. Over the past 5 years, this is what GE stock has done. And clearly, we can see this a bit better if we zoom into the past year. So this is when the Markopolos report came out. And since then, we know that GE stock pulled back like 10% as soon as that news hit. Since then, the stock seems to have recovered quite well. So this is a breakdown of GE's 2018 revenue according to business segment. And as we can see, they're fairly diversified amongst a whole different business lines. Now, their largest is GE Aviation. And aviation, this is one of their most important business lines. GE Aviation is one of the largest suppliers to the aerospace industry in the world. And this business line alone accounts for about 60% of GE's operating income. Now, GE needs for their aviation business to continue to do well, since GE is in the middle of restructuring their business, as they have been for a few past years, and they expect to be for a few more years. GE Aviation is expected to be one of their core business lines. Now, they have run into some issues with the grounding of the Boeing planes, of which they were a big supplier to. So overall, I would expect, as all of that stuff gets sorted out, for GE Aviation to stay fairly strong and for that business line to continue to do fairly well. Then with their power business, well, their power business has struggled a bit over the past few years, but then in the past few quarters, it looks like their power business might be stabilizing. Then GE Oil and Gas, well, that's practically gone for 2019. These are 2018 numbers, but GE is spinning off Baker Hughes, which falls into that category, so now it's practically gone. GE Healthcare, they've been shrinking as well, and the new CEO, whose name is Larry Culp, he stepped in a few quarters ago. Well, they're selling their a big part of this business called biopharma to Danaher. Danaher is Larry Culp used to be the CEO of Danaher, which is how that deal happened. GE is getting about 20 some odd billion for that deal. And hopefully that they can use that to reduce their long-term debt, which Larry Culp has said is very important to their overall business. With that being said, I think it makes sense to switch to the long-term debt of GE, because compared to GE's market cap, well, they've had a huge amount of debt. Now, as we can see, debt is getting better. This is a quarterly chart going back the past few years, and debt looks like it is getting better, especially in the past quarter. So overall, it seems that Larry Culp's plan of reducing debt is working. Now, I think it also makes sense for us to look at GE's cash. Now, we can see that cash was struggling for a while, but once again, in the past few quarters, it's been climbing. And I think this is actually a a strong sign for GE's business in general. If you're reducing debt while simultaneously increasing cash, I would think that that's a strong sign for the persistence of the business over the long run. So overall, I think that they're doing a good job of turning the business around. I think it's going to continue to take a few more years. Now, our question is, what do we think GE stock is worth today? Well, in the last video, we compared it to companies like 3M and Honeywell. And at the time, we thought the fair value of the stock was about $13 per share. GE at that time was trading at about $10 per share. So that would have been a 30% upside. Now, I still think this is a logical way to come up with a fair value for GE stock. Free cash flow, discounted free cash flow is a tricky thing to use for them since there are a lot of question marks and it'd be tough to find any reliable numbers. But if we stick with a forward PE multiple, well, right now, Honeywell and 3M have a forward PE of about 20x. And assuming that we believe analyst estimates for GE stock of 67 cents for next year's earnings, well, that would make their stock worth about $13 using a forward PE of 20x. That's the same we came up with last time. Although last time we used a forward PE of just 18x. So clearly analysts have reduced expected earnings per share. So if we stuck with 18x, same earnings per share, well, now we get a purchase price of about $12 per share. And with the stock currently trading at about $11 per share, well, to me, that would mean that, according to that math, it would mean that GE stock would be worth about $12, which is about 9 or 10% higher than the current stock price. Now, another important point for us to check on is GE's credit rating. So back in 2009, GE had a credit rating of about AAA. It was AAA at the time, which is the best you can get. Right now, it's down at Baa1. They hit that level in 2018, and it's been there ever since then. Now, I think that this is overall a positive sign since GE kept getting cut right down the line from year to year as the business struggled. This is according to Moody's credit rating. Now, if they continue to pay off debt and improve cash, well, I would expect for this credit rating to stay here, fairly stable, and possibly improve. This could be very helpful in the long run. Now, this brings us to the ultimate question: do we think we should invest in GE stock right now? Well, for me, I'd like to see the stock fall a bit more. I prefer to stay on the conservative side of most investments, so I would generally like to stick with the original 18x, the forward PE of 18x. To me, that's a much more reasonable number than using 20x, and that would put their fair value at about $12 per share. Now, I think that the 10% upside, frankly, is not a big enough upside, according to our calculation of fair value, when we know that the SEC is still probing them. There's still these question marks as to whether or not they can turn the business around. Although I think that they will over the long run, there are some hurdles in the way. Over the long run, I think GE stock could be a great buy if we're willing to sit in it for a very long time and let them turn this thing around. Then they're likely to be priced quite well in the future, out at least a few years. Now, the whole GE fraud issue is still sitting on the table. And after the last video was done on GE fraud, I actually created a video where we look at some red flags that could help us identify when a company could be committing fraud. If you're interested, that could be a good next video for you to watch. As we're doing our research, I think it's helpful to think through these red flags, or at least watch for them. So, besides that, thank you so much for sticking with me all the way into the video. I really appreciate it. I hope to see you over in that video. Thanks. I'll see you in the next video.